Dear viewers, welcome to another Cryptoverse weekly report. Several turbulent days are behind us, during which Bitcoin reached a new record on Tuesday, crossing $108,000. And on the last day of the week, it plunged to the levels below $93,000. The price swing was caused primarily by the statements of the first man of the U.S. Central Bank, Jerome Powell, after the Federal Reserve announced the decision on the third reduction of interest rates this year for a minimum of 0.25%. This move, which is generally positive for risky assets, was largely already factored into the prices, but Powell's statement that next year the Fed's monetary policy will be more restrictive than expected was not factored into these prices. And today, among other things, we bring you Bitcoin's price pullback has resulted in a bloodbath of alts. Ether, Sol, Doge, and ADA record double-digit weekly minuses. Corrections like this are quite common, and there will be more of them, but the bull run is by no means over. Will the potential formation of BTC reserves lead to a supercycle? Everyone is waiting for the first moves of the new president of the leading world power. So let's start the report. After the Fed lowered the reference cost of borrowing by 25 basis points on Wednesday, in line with market expectations, Jerome Powell announced that next year, instead of the previously projected 4, there should be only 2 new interest rate cuts, apparently for a total of 0.5%. Not only did this make it clear that the amount of new liquidity would be smaller, but it also implicitly signaled that the Federal Reserve still has not reined in stubborn inflation. And so there's panic, there's sales, there's redness on the crypto market. More than $1 billion in liquidations of mostly long positions, that is, traders who bet on the growth of cryptocurrency prices, was recorded already on Thursday, just the day after Jerome Powell's speech. A fairly panicked reaction from investors resulted in a 15% pullback in the price of Bitcoin, from the new all-time high of $108,000 to $92,800, before a slight recovery above $95K, for how much the leading crypto is changing hands at the time of making this report. And while Powell was indeed the trigger, the fact is that the crypto market was simply overheated after about 45 days of virtually uninterrupted growth. In other words, since November 6th, risk assets have enjoyed an impressive one-sided move, leaving the market extremely vulnerable to any shocks. Given that streak, this pullback seems healthy and is actually quite shallow compared to the usual bull cycle corrections. After all, even in this cycle, even this year, drops of over 30% have already been seen. But again, as after every significant redness in the market, the narrative of the end of the bull run was reawakened. Of course, the bull is by no means finished, and its most explosive phase is yet to come. It should certainly be said that there will definitely be new corrections, but they could also be as shallow as this one, at least according to Bitfinex analysts, who estimate that institutional demand will bring the BTC price to $145,000 to $200,000 by the middle of next year. This demand, as is well known, is already visible through spot BTC ETFs, which have recorded $36 billion in cumulative net inflows since launching at the beginning of the year. Admittedly, it should be said that on Thursday, in accordance with the reactions of the entire market, they recorded the biggest minus so far. That is, a $672 million outflow after a 15-day positive streak. So strong profit-taking is definitely noticeable. And on that same track is the data of the analytical company Glassnode, which says that in a period of 2 months, the total supply of Bitcoins held by the so-called long-term holders decreased from $14.23 billion to $13.31 billion. However, sales by long-term holders were taken over by short-term holders to ensure price maintenance. Glassnode analysts have also noted that the share of wealth owned by new investors has not yet reached the levels seen during the previous peaks of the cycle, which should mean there is still plenty of room for growth. And despite quite a bit of panic in the market, most analysts agree that the trend is still bullish and that momentum will remain strong once the current correction is pushed through. Or as the well-followed pseudonymous crypto trader and analyst Rekt Capital put it on X, Bitcoin has just started its parabolic phase in this cycle. Recht adds that such a phase usually lasts 300 days, and it is only day 41. Furthermore, in the light of increasingly loud conversations about the potential of Bitcoin as a strategic reserve asset on a global level, experts estimate that such a decision by even one country could cause a domino effect and raise the price of BTC to previously unimaginable levels. So, only the sky is the limit. Yes, I think we will. The president-to-be told CNBC when asked if his administration would form a strategic Bitcoin reserve, a move that could push the price toward $800,000 by the end of 2025, as some predict. For example, Plan B, the creator of the popular price forecasting model of the leading crypto, known as stock-to-flow. Additionally, with expectations rising that the new administration will definitely go down this path, many are wondering if such a move could lead to the mythical crypto supercycle. And indeed, since Wyoming Senator Cynthia Lummis introduced the Bitcoin Reserve Bill earlier this year, the phrase has been one of the most talked about in the crypto space. The moves of federal states such as Texas and Pennsylvania, which have already launched similar legislative initiatives, also contribute to this. Allegedly, Russia, Thailand, and Germany are also considering the formation of their own reserves, thus further increasing the pressure. And of course, the question that arises in itself is whether this potential competition of nations to secure their own Bitcoin supplies will lead to the interruption of the usual 4-year cycles in which bull and bear phases alternate, phases of decline and growth of the leading cryptocurrency, which after all dictates the movement of the entire crypto market because there are only 21 million Bitcoins. With a slight reservation that every Bitcoin cycle at least partly has this narrative that everything is different in it, the conditions for a supercycle have really never been this ideal. Primarily because in BTC's 15-year life, there has never been a pro-crypto president of the leading world power who at the same time, which is rarely seen, controls both houses of Congress. Actions so far certainly suggest that the new administration will be favorable to crypto. Paul Atkins, an advocate of crypto deregulation, has been nominated to chair the Securities and Exchange Commission and is set to replace in crypto circles the hated Gary Gensler. Also, pro-crypto Scott Bessent has been named Treasury Secretary, and former PayPal COO David Sachs has been named AI and Crypto Czar, tasked with developing a clear legal framework for the crypto industry. Earlier this month, renowned economist Alex Kruger also said that the political climate leads him to believe that Bitcoin is very likely already in a supercycle. He believes that this unique situation could be compared to gold's situation when the precious metal jumped from $35 per ounce in 1971 to $850 in 1981, when former U.S. President Richard Nixon took the U.S. off the gold standard, ending the Bretton Woods system. And while Fed Chairman Jerome Powell has stated that the Federal Reserve is not legally allowed to own Bitcoin and is not inclined to change the law to allow that, it is certain that the new president can find a way to force the U.S. central bank to participate in this truly revolutionary move, or that he can completely bypass the Fed. Of course, if he really wants to. And the share of social media posts talking about buying cryptocurrencies as a result of the ongoing correction rose to its highest level since April, according to data from crypto analytics company Santiment. Buy the dip, investors write on the networks, apparently looking at this price retreat as an opportunity, as a Christmas sale. And in this context, it is most worthwhile to devote yourself to buying alts because they simply dived much deeper than Bitcoin. The usual price collapse of altcoins, whenever Bitcoin enters any serious correction, has resulted in minuses in almost the entire market, of course, with honorable exceptions. So weekly minuses of 20 to 30% are by no means exception. The king of altcoins failed to hold the $3,500 support level, and panic selling is now threatening a deeper pullback. Despite the now broken 18-day streak of net inflows into spot Ethereum ETFs, Ether is only 10% away from falling below $3,000, which is by no means out of the question if whale liquidations continue. However, the long-term outlook is not bleak. In fact, according to Santiment data, the supply of Ether on exchanges fell to 10.6 million pieces. In the 3 days ending with Thursday, nearly 190,000 ethers worth $7 billion left the centralized platforms. A drop in supply is seen as a positive thing because investors are confident enough not to hold their tokens in hot wallets on exchanges, where tokens can be sold quickly in times of panic. Therefore, the assumption is that investors are confident in the performance of Ethereum in the near future and do not plan to sell this crypto. Currently, Ether is changing hands at $3,300, with a weekly drop of 15%. Meanwhile, XRP plunged 11% to $2.17 despite the good news, namely the launch of Ripple's stablecoin. Conversely, BNB is down 8.5% at $658, and Sol, with a drop of 16%, fell below $200 and is traded at $188. Doge is in the weekly minus as much as 27% at 30 cents, and the top 10 is closed by ADA with a drop of 23% and a price of only 86 cents, while just a few days ago it was at $1.20. But as we mentioned, it is not that there are not positive performances in the top 100. The ranking is led by amazing Hyperliquid, which is growing week by week and seems unstoppable. This time the plus is more than 50%, and the price has jumped to $27. Movement, BitGet token, and Fast token follow, while the biggest losers are Dogwhiff Hat, Gala, Pepe, Floki, and TI. And so, yet again with altcoins, we have come to the end of another Cryptoverse weekly report. If you have enjoyed the video, please give it a like, leave a comment, and we would also greatly appreciate if you click subscribe. Thank you for following, and kind regards.